This is really talking about the stock market overall. So if you look at what's happened in the stock market, I'll be the first to admit that the last 2 years have been really crazy. And I don't, I think I could have probably predicted to some extent, the coronavirus, down move to some extent. I mean, we saw that coming, but I'll show you to me, possibly the best stock market indicator that I've ever found. And I can tell you what I did not predict. I did not predict the huge bull market that started in April. But here's the good thing. This indicator I'm going to show you did predict that. So even coming into this year, looking at all the crazy things happening out there, and you analyze, the big spending of the government, things like that, and you play that out and what different experts think out there. So I've been cautiously waiting for a top, but this indicator hasn't said that. This indicator has been strong buy for the whole year so far. So it's really been amazing, and it's become one of my favorite indicators. So let's go ahead and jump right in, and I'll show you exactly how it works and where it came from. So my background is basically from the hedge fund space for about 20 years or so as a senior strategy developer. And I focused my career basically on analyzing price charts and data to both forecast where prices are likely to go, and to also build models, trading strategies, if you will, that are driven by what you see on the price chart. So buyer strength or seller strength. So that's been my career for the most part. Now, let's just quickly cover some standard risk disclaimers. Trading involves a high level of risk and is therefore not suitable for all traders. Before deciding to trade, you should carefully consider your trading objectives, level of experience, and ability to tolerate risk. Also, CFTC Rule 4.41 simply states hypothetical or simulated performance results have certain limitations. Unlike an actual performance record, simulated results do not represent actual trading. And I'm going to use a bunch of simulated results today to showcase what this indicator did during certain time periods and with certain markets. So you'll understand when I show that to you. And the other thing is my philosophy, and I know Jeanette and Hubert and everybody, that we feel the same, and that is make sure, the first thing you do as a trader, understand the risk element of trading, understand that side of trading. And then once you understand it and you're okay with it, then move forward to learning how to make money in the markets. So what I'm about to show you could be the ultimate stock market inside information, and you'll soon see why I say that. Now, trying to figure out what direction to trade stocks in is really the biggest question for traders and investors in the stock market. Now, we can analyze price charts, we can analyze PE ratios, economic numbers to try to figure this out, and they can be highly inaccurate over time. I'm sure you've seen that yourself. So for traders, making money in stocks is about finding the hidden clues to give us an edge over the broad market. That's really what our goal is, and that's what this powerful indicator is going to do for us. Now, what if we could know what all the other traders in the market are doing? So we've all spent a lot of time looking at interesting, different ways of analyzing price charts. Certainly, I've spent my entire career doing that. But this is the first time I've actually stepped out of that and said, okay, is there a way to actually see what all the other traders out there and investors out there are doing? And if we could see that information, how powerful and how valuable would that information be? So when the majority of traders and investors, when you think about traders, this is a catch-all phrase in this webinar. So this is everybody in the stock market, and this is recognizing that about 89% of the daily volume is what we'll call large institutional traders and investors. So what if the mass majority of everybody in the stock market starts buying, then we buy? What if we recognize that? What if that is what we're tracking? We're just sitting back when all of the traders and investors in the stock market start buying, then we buy as kind of a part of a strategy. That makes sense, right? Bull markets are driven by strong buying. They have to be driven by strong institutional buying. There's never going to be a bull market if you don't have strong institutional buyers out there. And then the flip side is, what if the majority of traders and investors in the stock market become sellers like they did last year in February when the coronavirus threat, if you will, started making its way around the world? Big up moves in stocks are always driven by and led by strong buying. Now, the most powerful sentiment is not what traders are thinking, but it's what traders are actually doing with what they're thinking. That makes sense, doesn't it? Everybody has an opinion out there, but the most valuable opinion to me is going to be the people in putting real money behind their opinions, and what are they doing? What are they doing with all the information they have? Now, unfortunately, we can't see the research side of what all the other traders in the markets are doing, and that includes the large institutions who spend literally millions of dollars on their, research, and literally, hide that research behind biometrics and everything else. So they hired the smartest, people out of college. They send these research teams to corporate headquarters, and they're looking for the information that you and I will never see. Okay, so understand that they have the best information, and we're never going to see that. They're never going to share that information with us overall. I mean, we can watch the different financial channels, and they're giving us the freebies, but very, rarely would they ever share any of their really valuable information. Now, we do know that the stock market moves higher when there are more buyers. That makes sense. When there's more buying power out there, it's going to move higher. And we also know that the stock market moves lower when there's more sellers out there. So if only there was a way we could see in real time what all the other traders and investors are doing, wouldn't that be the ultimate information out there? Now, here's the interesting part of that. So interestingly, the New York Stock Exchange created a way for us to see what all the other traders and investors are doing on the New York Stock Exchange. By tracking the New York Stock Exchange trading, we can track the smart money in the markets. Now, what is the smart money? Smart money, in my mind, is within that 89% of daily volume, the big institutions, because they have far more information than we'll ever have. And at the end of the day, you and I could have a very compelling reason for saying the stock market should go down. I feel like I've had one for a while, but at the end of the day, I look at this indicator and I yield to it, because it's a herd of elephants, right? If they're all running one direction, then I'm going to run the same direction, regardless of which way I think they ought to be running. So let's take a look at the New York Stock Exchange. The New York Stock Exchange is literally the cornerstone of the stock market. The average daily trading volume on the NYSE typically ranges between 2 and 6 billion shares, might even be more lately. Average every day, on the New York Stock Exchange, NYSE, has approximately $200 billion of trading volume. This has actually increased recently. So it's fair to say that the New York Stock Exchange is the cornerstone of the stock market. It has the highest listed capitalization of stocks, and the trading on the New York Stock Exchange often sets the tone for the entire stock market. So because of this, because of the stature and the importance of the NYSE, then this opens up a very intriguing opportunity for us, because they have offered a very powerful way for us to see what's happening inside the NYSE. So the NYSE created a powerful tool for us to see what all the other traders and investors on the New York Stock Exchange are doing in real time. Now, here's the thing. When you see these big institutions out there, they're rarely ever buying one stock. It's either they're buying, a basket of stocks, or they're either increasing their stock market exposure overall, or they're decreasing it. So that's how they operate. They rarely go out and buy like a small hot tip stock. They're buying a basket, across the board buying and selling is what they typically do. So this tool, this powerful tool in the New York Stock Exchange, is called the NYSE TICK, a valuable measure of short-term stock market trading activity. Now, if you're familiar with the NYSE TICK, this is not what you think. All right, I'm going to show you something very different and very powerful behind the scenes with this powerful measure. Now, to understand why this measure is so powerful and what they did right when they created this, let me explain the concept of bid-ask. So if you've traded for a while, you understand that every stock out there has what's called a bid and an ask price. The ask price is the lowest, or we'll call it the most attractive selling price from the standpoint of buyers, right? It's the lowest selling price. For this stock right here, the ask price is at 102.50. The bid price, there's a lot of buyers out there. The bid price is going to be the highest of those, the buyer that's offering to buy at the highest price level. Now, these are limit orders, all right? So they're saying the ask price is the seller saying, if you're willing to come up to my price at 102.50, then I'm willing to sell you some stock. Or the bid is the buyer saying, look, if you're willing to come down to my price, I'm willing to buy some stock at 102.25. So it's very important to understand that. Now, when the NYSE created this measure of this NYSE TICK index, they were focused on a certain kind of buying and selling activity. So for the buyers, they were focused on not the buyers down here who were saying, come down to my price, right? Not those buyers. They were focused on the buyers that were going up to pay what the sellers were asking. So we'll call these motivated buyers, okay? They were also measuring, or they also measure within this NYSE TICK index, we'll call motivated sellers. So they're not measuring the sellers up here who have a limit order saying, come up to my price. They're measuring the sellers who want to dump their stock. They want to get out, all right? So they're motivated, they're going down in price to hit the bid, where the buyers are, and they're actively exiting their stock. So that's what they did right when they created the NYSE TICK. So the NYSE TICK shows us in real time the net number of upticks, motivated buyers, minus downticks, motivated sellers on the New York Stock Exchange. And that's really a very important distinction there. So it's tracking these motivated buying orders and motivated selling orders across the entire exchange. So here's what it looks like. If you look at a chart, if you haven't seen this before, this looks like a noisy EKG. Now here's my chart, normal chart on the top. This is actually a 5-minute chart of the SPY, which is the S&P 500 ETF. Now, the first thing a lot of you are going to think is, hey, I'm not a day trader. This is not about day trading. This is about the increment where we're collecting data. We're collecting the data on a 5-minute increment. We could do it on a 30-minute increment. We could do it on other increments as well. This is a 5-minute increment here. We're not trading day trading here, okay, for this example. I'm just showing you how this data is coming across. So top chart, we know about 5-minute chart of the SPY. The second chart, I'm going to circle in, I'll circle in yellow here. This is an EKG looking data feed. This is not, they call it not an indicator, it's supposed to be an index. So they call it the NYSE TICK index. And this is that buying and selling, motivated buying and selling activity across the New York Stock Exchange. This is how they give it to us, right? So if you're like me, you look at it and you're thinking, this is kind of noisy, difficult to read, highly subjective, all right? Now, it can be used, there are traders out there that will create reference levels for this and try to read what's happening intraday shorter term. So they'll say, okay, is there more buying? Is this telling me there's more short-term buying than I can jump on board for a quick little pop to the upside? Or is there more short-term selling as I view this subjectively to say there's more, right now, and maybe I can jump on board to get a little quick pop to the downside? That's not what we're here to talk about. I'm going to show you a very powerful hidden information, if you will, behind this data right here, okay? So this is how a lot of traders use it, nothing wrong with that, but it's subjective, and they study it, they get better at reading it, they get more experience, and that's how a lot of day traders will use this information. And for the most part, that's where it stopped. So most of the industry has said, okay, here's the data you give us, and here's how we'll use it. Now, what I did, I've been a senior strategy developer and researcher for hedge funds for a number of years, so my fun day would bore the heck out of most of you, okay? My wife hates what I have fun with. Now, what I thought would be fun is to say, okay, we know this is from the New York Stock Exchange. We know that the New York Stock Exchange is the cornerstone financial exchange in the world. So surely this data feed has a lot more powerful information than meets the eye. So this is what they give us. And my theory was that behind the scenes, if we extracted more data from this, right, or presented this data in a different way, this could give us incredibly powerful information. So that was my theory. And so I said, let me do some research, okay? So this is my fun Saturday afternoon, rolling up my sleeves and trying to figure this out. So many people consider the NYSE TICK to be the most powerful sentiment indicator in the stock market. I like that idea. I think there's something to it, because this is not just what traders and investors think, it's what they're doing with what they think. They're buying or selling, but they're actually taking action based upon their research and what they think. Now, with time and practice, like a lot of day traders, you can learn to read the NYSE TICK indicator, and with experience, it can give you a little bit of a short-term edge day trading, where the stock market is heading intraday. But it can be difficult to interpret the NYSE TICK at times. It can be quite noisy. So I had to ask the question again, is it possible that there's a better way or much more powerful data or information that's hidden behind the data feed, this TICK index that the New York Stock Exchange gives us? By knowing in real time if there are more buyers or sellers, like aggregated more buyers and sellers, I had to ask the question, can we use this inside information about the buyers and the sellers to create a powerful trading strategy or investment strategy for that matter? Now, we know many traders read the NYSE TICK to find short-term intraday trading opportunities. That's not what I'm talking about here. what if, exploring other options here, what if we try to find if there's a hidden clue behind this index? And the basic idea is if we detect, like, we'll call it sustained buying that's happening, like there's a lot more buying happening on the New York Stock Exchange, then we buy ourselves. Or what happened last year, and I'll show you exactly what this indicator said last year with Corona. What if we start to see this thing start to tank? A lot of other traders and investors dumping their stocks, then we ourselves turn around and sell too. So that becomes our information that we trade or invest off of in the stock market. So I decided to research if the NYSE TICK indicator held hidden clues about the long-term direction of the stock market. Now, my experience told me that the NYSE TICK was good for more than minute-by-minute intel or trading information. I wanted to see if the NYSE TICK held important clues to significant shifts in buying and selling in the stock market. So my goal was deciphering the hidden clues buried in this NYSE TICK index, and that was an intriguing challenge for me. So now again, my background, I've spent the last 20 years developing hedge fund trading strategies, hedge fund indicators. So this was something, that was right up my alley. Now, this is the first time now that I've actually not taken the actual market data, but gone out and looked at other market data, in this case, the NYSE internal data, to try to use that as a powerful indicator or trading strategy. So I decided to research the hidden clues buried in the NYSE TICK index to see if we could garner a powerful advantage, and that is to trade in the same direction as the herd of buffaloes or herd of elephants, if you will, right? We don't have to understand why they're doing what they're doing, right? Do we? We just have to be able to see, are the majority of the big boys out there in the markets, the smart money out there, are they buyers? Are they buying right now, or are they selling? Is there something that they're seeing that's not on the news, that's concerning them? And that's what I was really after. So this is quite possibly the most valuable information out there, almost, because we're jumping in on the side of the majority of traders as a part of a trading strategy. So I had to pose two questions. First of all, number one, can we measure, this is question number one, can we measure sustained buying and selling in the NYSE TICK index? I mean, is it even possible? Because we're dead in the water if we can't do that. Now, if the answer is yes to that, the second question is, can we create like a trading signals or trading filter or some sort of powerful way to know which side of the stock market we ought to be trading from? So first question, I rolled up my sleeves to answer, can we measure sustained buying and selling using this data from the NYSE TICK index? So after many hours of testing the NYSE TICK index, I discovered that shifts in buying and selling often preceded major price moves. Every major up move, every major bull market has this one thing in common. The buyers were stronger than the sellers. It's common sense, right? Doesn't that make sense? They have to be. And every major down move in the stock market has this one thing in common. The sellers were stronger than the buyers. So this is what I did. I took this NYSE TICK index, right, the noisy orange EKG, hard to read one in the middle, and I built an aggregator indicator down here at the bottom. So I wanted to see if there's a different view of this data that could be much more powerful for us and that we can use as both traders and investors. And this is what I got. So I've got this indicator down here. I call the top tick tracker. Now, where do I get top from? That's our brand, Top Trade Tools. And the tick comes from the NYSE TICK, and it's tracking now, we'll call it sustained shifts in buying and selling. And so that's what it does. So we'll dive into that here in a second. So I created an indicator to measure sustained buying and selling in the NYSE TICK, and I called this the top tick tracker. And here's how you interpret it. Very, very simply. Green, this indicator turns green. This simply means that the buyers on the New York Stock Exchange are stronger, are the buying across the board, and that includes all of this top secret institutions. They'll never show us the research. We can now see as a whole whether they're aggressively buying or selling the stock market. Number two, if it turns red, we can now see that they've turned sellers, that they're actually selling the stock market. Now think about how powerful this is. All right, I'm going to show you what happened last year with the big, we'll call it the big sell-off or meltdown with coronavirus. Well, I'll show you exactly what this told me back then, and I'm going to show you what it showed me shortly thereafter that actually shocked me, and I was totally wrong about. But who cares, right? I now that I have this information, I don't have to concern myself with the whys, right? Because this is telling me what's happening, And it turns out that this is incredibly powerful information. So if I see green, I know that the majority of institutions out there are buying stocks. I'll show you here at the end what it's doing right now, but this is really intriguing information. So we got to dig deeper here. Now, we know this shows us that we can now measure sustained buying and selling on the NYSE tick using that data and making it a lot more readable. But the next question is it usable? You know, we've all seen trading indicators out there that look kind of cool and that we think we can use, but the reality is we've got to test it. We've got to be able to say concretely that, yes, it can be used to trade. So I created some simple rules for an NYSE tick based trading strategy. So here are the rules. They couldn't be more simple. So my rules are, if it turns green, when buyers are stronger, we buy. That's our buy signal. If this indicator turns red when the sellers are stronger, when I say sellers, I mean across the board, everybody in the stock market starts dumping, then this indicator is telling us to sell. All right, so I made it as easy as green buy and red sell with these colors. And that's what I like. Even though I've been in the hedge fund space for a long time, I've seen a lot of very complex strategies. I like simple. Simple is not a bad thing, and simple can be very, very effective at times when you're looking at the market. So the question is, can making money in the stocks be as simple as jumping in on the side of the buyers when they're stronger, or on the reverse side, jumping in on the seller side when they're stronger? So I decided to take this data, this information, and run some tests with a new tick trader strategy using the hedge fund backtesting technology. I've done that all my career. I've got all that technology on my side. So I decided to use 5-minute price bars to collect the data. Now, it's not a 5-minute system, right? It's a 5-minute collection, data collection. So every 5 minutes, we can take a sneak peek. What is happening on the New York Stock Exchange? More buying, more selling. And then we incorporate that into this measure, this longer term reading of buying and selling activity within the New York Stock Exchange, getting powerful stock market information about shifts in strength between the buyers and the sellers. Now, one interesting time frame right out of the gate that I discovered is a 20-hour time frame. So when 20-hour shifts took place in the stock market, this oftentimes would be material. It would be something to watch and something to pay attention to. So I created a simple color bars trading strategy so I could see this up on the chart that I call the top tick trader. All right, just another tool. I'm just taking the colors now and now coloring my chart. So first victim here, first market to test, S&P 500 ETF called the SPY. And here's what it looks like. So I basically, just to recap, I've taken this data, this noisy orange data in the middle from the New York Stock Exchange, has nothing to do with my chart on the top, right? And then I've converted that to my tracker down here at the bottom, top tick tracker. And now I can take the tracker color, whether it's red or green, and then superimpose that on my chart. So now I can look at my chart and say, okay, it's green. That means there's more buying happening in the New York Stock Exchange. Or it's red. That means there's more selling happening on the New York Stock Exchange. So now let's test it. It's as easy as when it turns green, I'm a buyer. When it turns red, I'm a seller, okay? Now, surprisingly, I was actually really surprised by this. I did not expect a lot from this, but I went back for 12 months, assuming 100 shares of a trade. I'm not factoring in commission slippage here or trading costs, and there is no commission anyways for a lot of stocks, as well as very liquid market, so probably minimal slippage. And this ends up making, on 100 shares, $9,782 with a really good looking equity curve. So the profit's great, $9,782, but more importantly to me is this picture. So when you're testing strategies, a picture is worth 1,000 words. And this tells me that there's something to this. This is a really nice equity curve that's created here by tracking and trading on this data, all right? And this, when I say trading, could be even like a long-term investing or trading, whatever you want to call it, but using this data to decide whether I'm going to buy or sell. Now, 12 months back, now I went to 24 months back. So the next chart here is showing the data 24 months back from my testing period date, and this is now making 16,737. So that's really good. So think about what we're doing here. We're taking the data here is basically from the New York Stock Exchange, and then we are taking that and creating trading signals for a broad index, the S&P 500 ETF. All right, so this makes 16,737, and then 36 months, the profits jump yet again to 18,436, and the equity curve actually looks pretty good. So far so good. I was really, really surprised that this ended up being that helpful, if you will. Now, what about other stock indices? Is it just working on the SPY, or does it work on other stock indices as well? So next market I tested was the Dow Jones Industrial Average. So here's 36 months back. Let's just jump right to the back. This actually tested out the best, and that kind of makes sense to some extent because the NYSE is kind of known to be the large cap exchange. So what's happening there would likely impact the large caps more than anything else. This makes 17,580 with 100 shares trading and over 36 months. And the equity curve looks really, really nice. The trade graph does. So this is very powerful. What about QQQ? Slightly different stock index, 36 months. Not as good as the SPY, not as good as the DIA, but still not bad. Makes $12,925 over 36 months. Now, the last one I tested for the stock indices was the IWM small caps. And for this, makes 7,000, but it was the least effective in my mind. So a little choppy here for the first half of the testing. 36 months of testing makes 7,020, assuming 100 shares of this. So pretty good, pretty interesting data here on this so far, right? Now we're going to talk here in a minute how we can use this as traders, but this is kind of our investment cap on. I'll talk about some very obvious things we can do here. Now the top tick trader put up great results with stock indices. Now I'm wandering off the reservation here to start to test out and understand what about individual stocks. I'm going to try something new here. So I didn't expect anything here, honestly. Taking this information, broad-based buying and selling information, can we use this powerful NYSE tick information in our custom indicators to trade individual stocks also? So testing, trading stocks with the top tick trader using the same settings, the same data. Now we're applying it to Amazon. So here's what it looks like in the chart. And this is basically using the green bar buy, right? That's telling us that the aggregation, the buying power is now shifted to buying, or all the activity. Red bars tell us that majority of what's happening on the New York Stock Exchange is selling. So here's Amazon for 36 months. I was shocked. Makes $217,000. Now, can we explain this? Yeah, I guess we can explain that, because when there's aggressive buying happening, well, we know it's 89% of historical daily volume comes from the big boys, the large institutions. We know that they tend to buy across the board or sell across the board when they trade. So does it make sense that Amazon would be a part of most of the big portfolios? I think it does. So this makes a little bit of sense, but it's really interesting that we can use that data as trading signals to trade Amazon stock. What about Netflix, another FANG stock? Let's take a look. So 36 months back in Netflix makes $53,905. Really interesting, right? What about Google? So Google is not quite as good as Amazon and Netflix, but it makes 90,900 shares. But first half is kind of a little bit rougher there. Not terrible, but still makes money in the end. What about Facebook? A smaller, not quite as volatile as the other stocks. Made 16,000. Not a terrible, equity curve here. So interesting. And then CMG, I'm just throwing a few others out there. I didn't expect anything with Chipotle, but makes $73,000. We're using these exact same signals of when to buy and sell. What about JP Morgan Chase, a financial stock? I'm just flying through these. In this case, it did really well, $8,444. Not nearly as volatile as the other stocks, but really good numbers. Pfizer, I've got two more here. Pfizer, medical or biomed. Here we go. Very, very nice equity curve. So 3,286. And then lastly, FXI, China large cap, not recommended. Here are the results. Still made $1,902, but not great out of the gate. So I wouldn't use it for that. So this just gives us an idea of how helpful this information is. One, for the broad stock market, right? And then two, for individual stocks. Now, there's a lot of different ways we can apply this information, right? So the top tick trader proved to perform well as a trading strategy for a number of the indices, better on the DIA and the SPY than not bad in the QQQ, not necessarily recommended for the small caps or the Russell 2000. Now, what if we use this information as traders now? Let's put our trading cap on from the New York Stock Exchange as a trading filter. This becomes pretty interesting. Can we create a filter based on the NYSE tick data, the new indicator that we created, to show the direction that we should be trading in, not just investing, but trading? So I created another NYSE tick indicator called the top tick heat map to serve as a filter. All this is moving this information out of the way. So this is what I call a convenience indicator. Same information. Green is heavier buying on the New York Stock Exchange. Red is heavier selling. Seller stronger in red, buyer stronger in green, which means that our strategy when we're trading the SPY here in this case, we want to turn it on with the buy signals if it's green in this test. And if it turns red, we now want to focus our attention on the sell signals for our trading strategy. We'll get to questions here in just a minute, guys. But this becomes a very interesting question. So we could only take buy signals when the buyers are stronger as part of the rules here, and we can only take sell signals when that heat map at the bottom is red and the sellers are stronger. Those are the rules. So this could give our trading strategies a massive edge when trading stocks. So I conducted some tests to see if this actually would prove out as well as I would hope. So here are the rules. Now, first of all, we have to start with the baseline, right? This is a strategy, a very simple momentum strategy, unoptimized. I'm going to take all the signals. I'm taking all the buy, all the sell signals. We'd never trade this way, guys. This is only to test out to see how much we can improve potentially using the filter to show us what direction we should trade it. So test number one, all the signals. Test number two, does the filter actually help? So here's a 36-month back test for the SPY, and this is taking all the signals in a 5-minute chart. Why 5 minutes? It could be 30 minutes. We could choose a different chart. It doesn't really matter, but let me be the first to say you never want to trade this way, guys, ever. This is a great starting point for us to understand if we can make improvement from this using the filters. All right, so this is a basic momentum strategy, unoptimized, no filter, and we're taking all the signals. No surprise here, it doesn't do super great. All right, this is over a period of 36 months. Choppy, and it ends up losing money, over the whole period. So no surprise there, and loses 1471. Now here's the question. Can we take the same strategy and only trade in the direction of our green buy, red sell powerful filter we're getting from the New York Stock Exchange? So here's what it would look like on a chart. So now I've got a green bar on the bottom, that ribbon, a heat map. So now I'm only taking the buy signals from my momentum strategy. Again, you don't want to trade 5-minute momentum strategies unless you're really seeing a lot of volatility in the stock market in general, but this is good for our testing. And then when it turns red over here on the right-hand side, we're now focusing on the sell signals. We're now looking to short and potentially make money or buy puts. This is great for options as well. So here are the results when we trade in the direction of our powerful data we're getting from the New York Stock Exchange. We went from negative almost 2,000 to positive 8,000. Massive change. And when you look at trading, when you think about trading, that's what trading is finding the advantages out there. Let's test another market. What about the Dow Jones Industrial Average? Here's the before and after. So no filter at all, left side, not great. We'd never want to trade that, right? But still makes a little bit of money. I was shocked to see that. But look at the right side. Now we introduced a filter, beautiful equity curve here. And now we're making what? This ends up being like 5x the profits. So it ends up making a massive difference. And this sometimes is the difference between winning at trading and losing at trading. Here are the results for 36 months. I'll get to questions here in a minute, guys. But this is 36 months at QQQ. And again, I was surprised that QQQ actually made money in the first test, but you never want to trade this. All the signals on the left, choppy and makes 3,000 bucks. You throw in the filter on the right-hand side now we're making 8,000, so almost 3x, 2 point something x, but certainly a very, very strong improvement by trading in the direction of our powerful filter. So let's try one last test here. What about Amazon? Would this work on Amazon? Interestingly enough, all the signals on the left, Amazon ends up making with all the signals, really choppy, about $35,000. You throw the filter in there, and now your profits jumped about 120,000. So about 4 times the amount of profits here when we trade in the direction of the powerful filter. Now it's not going to work for all stocks. Certainly not going to work for all ETFs. Commodity ETFs, those are different. Forex ETFs, forex markets, commodities, those have nothing to do with this. So if you're a forex trader, if you're a commodity trader, and you're saying, well, how can this help me? It can't. This is for telling us the direction of equities, and not even all equities. Primarily the major stock indices, the stock market as a whole, right? And we know that the stocks are highly correlated as a general rule, and it can be used potentially for some select large caps. So that's what I'd say is the application for this. Now with the top TICK Heatmap filter, you can trade on the side of the winners. Now we can measure, are most of the traders and investors out there buyers or are they sellers in the stock market? Think about how powerful that information is. Excuse me. So for me, this is the first time I've used data like this for my personal trading. And this was something I'm always creating different strategies for my own personal trading, but this was one where I thought, wow, this is really cool, really helpful information. And I'll show you here what it's doing right now. I'm going to show you a story here about, let me just pop this up, but I had a call with a friend. So here's what's happening right now. I had a call with a friend, funny enough, think about the timing of this call. Back last year near the first of the year. And we were talking about something totally unrelated. Check this out though. This is what happened during Corona. Now, this is before all the major financial networks are panicking. They didn't start panicking until way down here, but we started quietly as we went about our daily lives. Guess what was happening? The big funds were quietly dumping their stocks. And these indicators that I created that are measuring the broad-based buying and selling in the New York Stock Exchange detected this. So the power that we have now to see what's happening in real time on the New York Stock Exchange allows us to see when the big funds are taking their top secret information. They obviously knew that coronavirus was going to be a big problem, more than any of the news networks were letting on. And so my friend called me. I had this telephone call right around this period, and he said, Mark, we talked about some other things. And last thing he said, hey, what do you think is going on with the markets? He goes, well, what's your opinion? And I said, I would go to cash. Really? He was shocked. What, you would go to cash? Yeah, absolutely. Really? And so, yeah. And so anyways, it was a quick conversation, and I was looking at this. Why would I say go to cash? Because the big funds are dumping their stocks. Other than Corona, it was kind of an obvious reason, right? But that's why I said sell. Now, funny thing is, he actually did. He went to cash completely, right? And he avoided a 35% collapse or meltdown in the stock market. Now, here's the hard part of any analysis in the stock market: when to get back in. That's the hard part. Getting out, now that's hard, but check this out. So if you follow the buying and selling pressure here, play this out. Look what happens in early April. So you avoid a huge drop there. We started seeing buying again. Now, why? I was actually surprised because I was expecting the stocks to get crushed more. So when this buying started happening in early April, guess what? I didn't need to understand the reasons. I just knew that the big funds were out there starting to buy up stocks again. So, hey, well, if they're buying, then I'm buying. Let's take a look at what's happening right now. So if you fast forward to right now in 2021, guess what? They're buyers. So right now, the stock, I'm looking for, at some point, I think there's going to be a massive top out there, looming inflation, lots of other things happening, right? But I think there's an inevitable top in the stock market. But guess what? I'm not looking for it now. Why? Because the buying power is very strong right now. And I can look down at this indicator and see what's happening with all the big funds. Are they buyers or are they sellers? And that gives me a great backdrop to whether I ought to be looking at bullish or bearish, types of trades. Now, let me show you something real quick here that's really powerful. This is where it gets powerful for us as traders. Check this out. Right here's a peak on my chart, and I drop. This happens all the time. Look at how much the stock market dropped here for whatever reason. I don't even know why it dropped there. This was in early May. But what's happening? Look at the same thing over the same period of time. What's happening with the funds? The big institutional funds were buying. They were net buyers during this entire drawdown. So I created a video a while back, and I don't know if it was right at this timing, but I said stocks are likely to go to new highs. Why? Because the big institutions they're not dumping it, they're buying it. So during this drop down. So you get this kind of volatility, these sharp drop-offs, those sell-offs that happen occasionally, and you can look at this index and say, okay, are they dumping it? Are the big boys now getting out of stocks, or is this something that I can look at as a potential buying opportunity? Same thing over here. This last sell-off, I said stocks are likely to go back up to new highs. They did. Why? Because I'm checking out still very strong buying activity according to this. We're just peeking at the New York Stock Exchange. What's happening there? What are the big funds doing? Great. They're still buying. Okay. Well, likely to go to new highs. It's really that simple. Now, when this turns red again, like it did in the coronavirus period, guess what we're doing? There's a couple of really powerful things we can do. So let me go back in time here. All right. One of them is you can go flat. You can get out of stocks. Now, if you trade, if you're talking about your investments, you absolutely need to talk to your tax advisor, talk to your advisor to make sure you're not creating a big tax liability for yourself. I'll be the first to say that. So I'm not suggesting that you blindly do anything wholesale without talking to your tax advisor. Okay. So that's very, very important. Number two is you could also do some interesting things like buy VIX call options. right? Or buy the VIX, not even call options, buy the VIX. So there's a really cool VIX strategy you can do that works great during these sells. Take 10% of your portfolio, you buy the VIX, and if the VIX increases by 3x, right, you dump it. So what you've done essentially is make 30%, right, on that one trade. It's a profit target trade. And then if we get something like this, the VIX blows out the roof, you make 30% on that trade, then you're done. And you've created a really nice buffer for your portfolio that helps protect and recover some of the potential losses that you could have. Does that make sense? All right, so let me answer some questions. Let me first do this for those of you asking, how to get this. Let's see here. Let me open that back up. So it's on here. Let's create that. I'm sorry, I closed down my study here. Here, I'll let me go to the presentation here, and okay, give me a second here. All right, so let's go back here. Let me just answer the question for those of you asking how to get a hold of this for your trading. And I'm going to go right back to the chart there. So tradable signals using the NYSE tick literally happen all the time. Understanding what's happening on the stock market, where the big funds are, is very powerful information. So the top tick trader, tracker, delta, these different indicators all telling us what this data is saying. It's a great strategy for trading stocks, options, ETFs, and stock indices. And it's great for a filter for our long-term portfolios as well. Now, you can also use this tool to trade options and stock index futures. Now, you cannot apply these indicators based on the NYSE tick index to a futures chart, but you can put them side by side, all right? Because futures charts are Central Standard Time. They've got different time frames they trade during the day. You'd have an indicator data mismatch. Just understand that, but you can still use the color of the data to give you a bias in which direction you should be trading the futures. So the top tick trader shows us when the majority of traders and investors on the New York Stock Exchange are buyers and sellers. The top tick trader helps us identify the best direction to trade the stock market in. Now you can see the hidden clues in the stock market when the buyers and when the sellers are stronger. Now, for those of you asking, let me just quickly go over this. Very, very simple settings. There's one, other than color, you're selecting an aggregation period, and we share a research sheet. So for different time frames, we recommend 30 minutes is really the time frame I recommend mostly, but as your data collection period, you cannot use this applied to daily charts. It has to be intraday. So 30-minute, you can do 15-minute, 5-minute, 1 minute, etc. But that's what I recommend doing. So simple settings, we give you the settings. You can play around with other settings if you want. It works for trading stocks, options, ETFs, stock indices, and stock index futures. And then also the platforms we developed this for: TradeStation, Thinkorswim, TD Ameritrade, NinjaTrader 7 and 8, eSignal, and Infinity IAT, and we're also developing it for TradingView as well. Now, it's a multi-platform license, so if you get it for TradeStation and you also use Ninja, you also use TOS, you can actually download it from multiple platforms here. So here's, and also I created a webinar, a workshop to cover some of the basics here. So I covered the NYSE tick define, measuring the buyers and the sellers in the stock market, the top tick trader trading with validated sentiment, I call it, mastering the top tick trader, tracker heat map, and there's a new indicator that's even included in this called the delta. Strategies to trade options and futures, the NYSE tick look back periods, the top tick heat map as a trading strategy filter, all designed to put the odds in your favor. Now here's the promo, guys, for a TradeThirsty event today. This is the top tick trader bundle. Now, ordinarily, the top tick trader is $497, the tracker is normally $497, the heat map's normally $497, and the delta also is normally $497, and the workshop is normally $297. So all this is actually more than $1788 normally. We've slashed it down by more than 75%. It's $447.30 today only, and this is for the TradeThirsty Toasted Traders event today. So let me go ahead and just copy this quickly in the chat box, and then let's take some questions. So thanks for your patience on the questions. Copying this in. We're still developing now for TradingView. So we're doing that with all of our stuff. So that's in process right now. And you know what? Let me just say this as a side note. I don't think there's an issue there with using or developing of TradingView, but we'll have to find out, because it's essentially getting data that's not shown in your chart. So I don't know whether they can do that or not. Just as a side note, I think they can, but I just want to throw that out there to make sure you understand that, okay? Let's see, are we to search for trading signals? Let's see, okay, so we may not get the same results. So you can use a lot of different strategies here, okay? I'm not suggesting one strategy. I'm saying that there's a lot of different chart setups. Like for example, if it's green, I can look for bullish chart setups. If it's red, I can look for bearish chart setups. So let's take a look at the chart here. Give me a second, I'm gonna pull this up and then we can take a look at an example of what you can do. So let me go ahead and just pull this up here. Give me a second here. So, all right, so this is one example. Let's see here, give me a half a second. Let's make sure this data is updated. Give me a second here. Okay, so, all right, so I'm gonna do a bit of technical analysis here with you and show you how you could have used this data. So I'm pulling it up. Give me a second here. Okay, and I'm gonna pull the charts up here. So 10 years back. Okay, SPY. There we go. All right, so here's some ideas on what we can look at, for trading, and then we'll take a look at what this is telling us. All right, so the tick indicator right here. Make sure this is going back far enough. All right, so here's one example. Let me just position my screen so you guys can still see the link here. And bear with me. I'm sorry. I'm just pulling up these charts. So here's an example right here. All right, so if you go back last year, and this is another like a view. This is when things start turning red or bearish. This is when the institutions were dumping their stocks last February. Now we know it's red starting on the 24th of February, right? So here's an idea of what you can use. Now, if I wrote a book, the 6 high probability or high profit swing trading patterns. So within the context of that red selling now that's hitting the market, this right here, I'm going to drop like a vertical line, is what I call a bearish zero touch. So that's a cycle that's peaking out with a negative red momentum reading and a negative Fibonacci cycle composite reading. These are 2 of my other indicators. You don't have to have these indicators, guys. This is an example of using your own type of analysis where you have a bullish or bearish opinion. So this is a bearish forecast for a swing trade. Why am I looking at that? Because we've got red. We've got the top tick tools are telling us that the markets are selling off. So that's why we do that. Another question is, let's see, can you please analyze coin? So Jim, what's your thinking there? Okay, a trading view. Okay, yeah, it does have charts for the NYSE tick. It should be good. Trading view's got it. We should be able to do it. Let's see. Okay, so the dual time frame offer. So we've already got a couple of you guys jumping in. There is an upsell here, and you have the ability. So this is an aggregation period right now. There's actually a short-term recommended aggregation period and a long-term recommended aggregation period to give us the colors here. So we actually have a more advanced pro version of this that you can upgrade to. Now you don't need it. You can just, the basic version is incredibly powerful. But if you're a trader who says, you know what, I want a little more advanced studies here, the dual time frame gives you the ability to combine 2 different aggregations, kind of a short-term view of institutional selling and a longer-term view. Okay, so if you want both, guys, you're getting a lot of very, very, very powerful indicators that can give you both. So you got the standard ones, which is what I'm showing here, and the upsell. Somebody was asking about the upsell. That is what you can use for, if you will, for a double time frame. So you can use it to see what short and long term combined together give you as a reading. So I won't go too far off the reservation here because that's we can dive into. That's a different story, and that's but that's what you get with that essentially. Hey Steve, okay, what does the current ES and SPY look like now? So let's throw the ES up there. Okay, so I'm gonna change this to @ES. Let's put this. Oh, you know what? I can't do this. I should have done that. So let's do DIA. Okay, so DIA. Throwing this up there, and let me get the data. So edit symbol, so it's today instead of stopping back then. Okay, so we're going to do 06/26/2021. All right, so through today, let's get this data going here. And so here, it takes a second. So this is now green. All right, so this is bullish. Now let's just say you had this as green and bullish. So here's I'm going to pull up the chart here now just go up and pull up like a 60-minute S&P. So this is a 60-minute S&P. Now this is bullish. Now we know we've got green during this big sell-off here recently. So now we're looking at bullish setups here, or even buy signals in different strategies. Now, even today, guys, you're hearing a lot of speakers who are presenting some different ways of trading and different strategies and things like that. So you could combine this data, the green data that we're seeing right now, strong buying, with some of the other or some other types of trading strategies where you get a buy signal in the direction of this data. Does that make sense? Do your signals, okay, do you have signals only? No, this is an indicator. It's a great question. This is something you install on one of the platforms that we listed. So wealth charts, this is for TradingView. We're building that out right now, by the way. That's not done, but that's being built out. TradeStation's done, TOS is done, Ninja's done, eSignal's done, Infinity IAT is done. So there's a lot you can download right now. And then if you're interested, so give us a call if you have any questions on that, 859-963-3445. Let me just type that in the chat box. 859-963-3445. And that's, we can help. Leave us a voicemail if you have questions, and we can help with questions. Let me go ahead and just copy in the link one more time. You've got to go to www.toptradetools.com/tick to take advantage of this. Can you show us? Okay, current chart of the SPY. Yes, let's pull that up. So this is essentially current chart of the SPY right here. So I just changed it. All right, here's the SPY, and it's green. So right now you're still getting the data. This is analyzing, crunching the data from the NYSE, and then you get the SPY in the top. So, and by the way, you don't have to trade 5 minutes. You can do it per intraday, and it becomes more of a filter in that sense. But in terms of, it gives you a larger perspective, and that is, what direction are the big elephants in the room trading? They're trading, the big boys are trading in the long direction right now. They still seem to be fairly comfortable with everything that's happening in the economy, even the Fed comments, everything. They're still holding on to their long positions. That's what that tells us. So this is the SPY, this is the DIA. It's going to give you the same information. They're both green. So this is Dow Jones Industrial Average here. And you can see here, this big sell-off represents a great buying opportunity. So you can turn on your buy signal here and take the short-term buy signals all the way up. So that's one thing you can do there. So lots of very interesting, lots of very cool ways to trade this. Wealth charts, it is on wealth charts. And I believe, so they were building it out in terms of it should be done on there. But that's, you get access to that as well. Can you show Tesla? Yeah, so let's try a different stock, Tesla. So Tesla, what's happening here? It's green and going up, going higher. So Tesla's a stock, I think longer term could have some downside, but heck, right now it's going higher. It's green. So yep. Let's see, do you have? So Rick, give us a call up with that question, and also you can send us an email, support@toptradetools.com, and we're happy to do it. It doesn't, guys. This is not for crypto. So one question is, if I trade crypto, if I trade commodities, nope, don't do this, guys, because it's not for that. It's not designed for that. All right, so let me just copy this one more time on there, www.toptradetools.com/tick. If you're a stock investor, if you're a stock market trader, this to me, and you're saying, I want to know the most powerful information on the stock market. Now, this is my opinion, but I believe this is among the most powerful information out there. Why? Because it's what the big funds are doing, right? It's not what they're saying. It's not, we're never going to see why they're doing what they're doing. They're never going to give you and I access to the research, but now we can see what they're doing as an aggregate, as a whole, and it's incredibly powerful information. And by the way, if I've missed your question, I do apologize, guys. I'm running out of time here, but feel free to send us an email, support@toptradetools.com, and then we're happy to get back to you. And I do apologize if I missed your question. Can you? Okay, please talk about the dual. Okay, got that earlier. Okay, indicators here. I don't know what they're asking there. Okay, can you show us current chart? Got that of SPY. So for ES, guys, you're just going to do a side-by-side chart with that. So for ES, you're doing a SPY chart on the left and an ES chart on the right, because they're different time frames. One's central, one's Eastern. Does the green indicate accumulation? Yeah, so no, it's a good question. I'll just close with this. And so the other tool on here is that I showed you a second ago was essentially telling us here. Give me a second. Okay. See if we've got here. I'm going to pull this up. So the delta here that you're seeing is so I need a tracker. Actually, I think I'm going to run out of time here, but I can send you I can definitely send you a snapshot if you want to. But the top tick tracker is what you want to look at for what's happening right now. So if you're saying, are they buying like the last 5 days or something, that's the tracker. But the delta, the big one that you're seeing right now is, on the chart, that gives you the magnitude more or less of the buying and the selling, if you will. All right, thanks for coming out, guys. So send me an email if you want more information. If you have a question, we're happy to help out. Thanks for your patience today, too, guys. 15 minutes, yes, you can use that. And we give you recommended settings in the resource area. So we have a PDF we can give you with that. But I want to be respectful of the other speakers, upcoming speakers. You've got a couple more today that are going to talk about some interesting ideas on how to analyze charts, how to trade the markets. So stick around for those. Let me get control back here to Jeanette, and I think she's going to kick me out.